Welcome to Martinis and Mentors, where real estate pros sip, share, and spill the strategies that actually work. I'm Yvonne Arnold, 40-year veteran realtor, business consultant, and your no BS guide to growing a real estate business that you love. So grab your favorite libation and let's dive in.
And Andy built and operated his own real estate team and brokerage for many years, but he did something that many people in our industry never do. He retired himself from the business profitably. Okay. So, and was able to go travel the country with his family. I know he homeschools his kids. And then he went and bought a farm, which someday I'll get that whole thing. I'm going to do a podcast with him and get that whole story. And then he came back in and said, I have a talent and a knowledge that the agents need. I am so grateful for him to have come into this industry because we did not have anybody helping agents who understood agents and the real estate business with their finances. So I've referred many people to Andy, and today he's going to take it away and he's going to talk about how the money talks first. And we have to talk about money first. It's a hard subject a lot of times for people, but we're going to do it. So Andy, let's get some clarity around cash flow, and it's all yours. Go ahead and take it away.
Thanks, Yvonne, and appreciate you letting me be here. It is a passion of mine to talk about this stuff because for me, it just had such an impact on my ability to live a life that just had a lot more meaning. Time with my family was always the main driver in building a real estate business, but it quickly, like a lot of us in any business we're in, it can take over really quick. And the key piece to that is the financial side of things. I mean, we get into this business to impact our family, right? It's the big why behind why we do what we do oftentimes. And, it can easily just do the opposite. And if we can get control on our financials, it can make all the difference. And I guess I'm a living example of that. And it's why I'm so passionate around helping others do it. I kind of feel like I'm on a big boat and someone's drowning in the water. I can throw that life preserver over because I have one in my hands if we just follow. And the good news is it doesn't have to be complicated. I used to get so frustrated around my financials because I didn't understand them, because I was getting information from people who were way smarter than me around the financials. And I needed it in dumb Andy language, right? And so that's what I hope to do today, is just to help you put a system in place, because that's what it's all about, a system that works for you to get what you set out to in your business, which was some time freedom, because you have money freedom. Money comes, we can then have time freedom. Now, we may choose with that time freedom to do more deals, but you are choosing to do it, not forced to do it. And I think that's the key here. So I know everybody's excited about the year and has goals around the number of deals they want to do. And if you're like me, it's like more. But more is not always the solution to the problem, right? Growth is only half the equation, and it is a critical half, but it's still only half.
I have to say, I'm going to interrupt really quick. If you guys are not following Andy right now, he is putting up some fire on online sites and really knocking down the image that we all have, that you have to go bigger, because he has seen behind those curtains and he's seen the lack of profitability behind those curtains. So I'm so excited to hear what you have to say today. And
luckily, God made me where I don't mind offending people in saying what is truth, and because it comes from a place of love. And so working with some of these top teams, some of our clients are $10-12 million top line giant operations, and trust me, some of them don't want the business that they have. You won't know that you won't know that from what they may say. So we're going to jump into a system. We can't grow our way out of our problems. Here's the thing: profit is not an event. It's not like a destination. It's not like once we get to a certain point, then we can have that profit, that freedom. It's a habit. And so I'm going to teach you the habit. Just like when we want to get physically fit, the diet becomes the most important part of of the equation, I would say. And we need to just have a system around our diet, right? And so that's what we're going to talk about. So here's the big idea. The problem with normally how we run our real estate business and is sales minus what we spend equals what we have left. Right? How many of us get to the end of the quarter, or a lot of times when I start working with you and doing bookkeeping and all that stuff for real estate people, you kind of get to the end of the year and say, that's usually when I look at what I made. That's an issue. So we need to just flip that on its head. So I want you to understand this whole thing and why it exists. Most people run their business sales minus expenses equals what's left profit. We need to flip that around and say sales minus a predetermined profit equals what I now have left to spend on my business. Do we see the freedom in that? Isn't that funny how when we have a system, it actually creates freedom? When we cage the animal, we actually create freedom. Now, when we want to go to that event and we see that thing we want to buy, it's like, does it fit in my expense model or does it not? I've already pulled out profitability, and we're going to talk about pulling out taxes, but now what I have left, can I make that decision? You can comfortably say yes, or you can say, can't do it. But the stress goes away. And so that's what we're gonna do here. Real estate is, your income tends to be irregular, and so we need to fix that problem. We don't want this fake confidence that, hey, I had a bunch of closings this month, I'm going to buy that new car, I'm going to do this, that, and the other thing, invest in that new staff person, whatever it is. That's called bank balance accounting, and we don't want to do that. And so here's what we're going to do. We're going to talk about creating smaller plates. Right? Think about this. Have you ever been to a Chinese buffet? Wow, my family loves going to Chinese buffets. But guess what? Isn't it funny how the plates are like these tiny little plates? Why? Because they know what they're doing. They know that if it's a smaller plate, you will take less food and there'll be less waste. You'll still eat the same amount in some cases, but there'll be less waste. And waste is the number one place in those restaurants that eats profit. Because they got to pay for that food that nobody ate. And had you not taken it, somebody else could have eaten it. Smaller plate. We need to create smaller plates in your financial world so that you eat less. And eat means spend in your business. Because what's the leftover that you didn't eat, just like in that buffet, you get to use personally. And we end up eating it all up in our business. So we're going to create some smaller plates. Think of it like an envelope system. Right? And I don't know if anybody's a Dave Ramsey fan. I was. It's the only reason I got into real estate, because I was able to pay off all my debt, and I used an envelope system, certain envelopes for certain things. And then I didn't spend as much in kind of just randomly. It's kind of like if your car has a full tank of gas, don't we operate differently than when it's towards the empty side? We just think differently. Where am I going to go? How much freedom do I have to go this place and the other place? And just think, I want you to remember this. Next time you fill your tank, think about what I'm about to say right now. You just feel differently. And that's what we need to figure out here. So there really are three outcomes of this system that I want you to understand. Three outcomes. A place for your profit that's predetermined, a place for owner pay that's consistent, because then you can live your life and not have these ups and downs of the crazy income and no income in real estate. That's your owner pay. And then 3, taxes. We got to have a place for your taxes, right? Because we do not want surprises at the end with that.
Say that again. What are the 3?
That profit, owner pay, and taxes. And I'm going to share my screen as to how you're going to do that. But I want you to understand that those are the 3 main reasons you need to have this system. You could have profit and then every quarter pay yourself profit, but have no consistent income, and your life's chaos. We got to have owner pay as well that's consistent. And then you could get to the end of the year and have a giant tax bill and it just blew up your whole world. That happened to me. I had 2 sports cars in the garage and I had to sell one because I forgot about taxes. I never wanted to do that again. And so you put a system in place. So here's what we're going to do. I'm going to share my screen here. And I'm just a visual drawer. I don't do slides and things like that. So I'm just going to share my screen because I want you to understand how this works. There's really going to be, there's going to be really kind of 5 bank accounts that you need to go set up. You probably already have one. Step 1, though, is you need a separate bank account, business from personal. If you don't have that, that's step 1. Separate your money, okay? Even if you're just getting into this business, separate your money. So I'm talking about a business account. You need a business account that all of the income comes into. It's just called the income account. You probably already have this. If you don't, get it. Okay, separate it from your personal. When you have a closing, all the money goes into that account. Okay, after the broker gets paid, and if you're a team, I don't think we have a ton of teams on here, more solo agents. So, your broker's going to take their portion, they're going to pay you, it gets deposited into the account. That's wonderful. But what the mistake people make is now they randomly pull money out for themselves. They randomly pay bills out of all this account. And the problem is we see all this money in that account and we feel really good or really, really bad about the business. And we make decisions based on however much money is sitting in that account. Let's solve that problem. Here's what you're going to do. You're going to go I want you to go set up 4 more bank accounts. Feels overwhelming at first. It's not. Trust me. 4 bank accounts, right? And by the way, if you go to the bank and they say, I don't know about this whole thing, find a new bank. Because this is the difference between winning in this business and not. And so you got to find somebody who's going to work with you, and most will. But what we're going to do is we're going to set up these 4 bank accounts, and we're going to have 1 for profit, 1 for tax, 1 for owner pay, and 1 for operating expenses. And if 100% of our revenue comes into this bank account twice per month, 2 times per month, you're just going to build it in your calendar. I do it on the 10th and the 25th in all my businesses. Any money that was generated in that main business account, we're going to do something with it, right? We're going to first put a predetermined amount in our profit account. I usually, in my businesses, have a 15% of all the revenue that came into my top line account into that business account. The second is taxes. I tend to put 10% in there, and then I put 10% in owner pay, and I put 65% in operating expenses. There is a way to determine what your I don't want you to worry about the percentages at this point. I want you to worry about the structure, the process I'm talking about here, not the amounts at this point. But what happens is when we do this, and twice a month, any amount of money that came into this income account, we transfer. We say, okay, I'm transferring money over into profit, 15%, 10% of it goes into taxes, 10% goes into owner pay. Whatever's left, in this case, 65 goes over here. And now all my bills for the business, my operating expenses, if I have a staff person, if I'm paying marketing, if I'm paying for coaching, whatever it is, it all comes out of here. I've separated. Do you see how simple this is? Like, this is the most simple thing, and it is the most effective thing. And once I've implemented this in my business, it becomes very simple. So basically, what you're going to do is set up these accounts at a bank. So 5 accounts, you probably already have 1. You're going to choose 2 days a month that you're going to make these transfers. You're going to transfer them according to what we would call your TAPs. Those are your target allocation percentages. These are mine. I'm just sharing you through what mine are. They don't have to be yours. And you're just going to run that throughout the month. So it's 2 times per month it's happening. That way, your accounts are getting money transferred into them. It's very simple. Then once per quarter, any money that ended up in this profit account, you're transferring out of it to you personally. Remember, I said these were all business accounts. So you're now transferring money to you personally from that profit account, 1/2 of whatever was in that account. So if over the last quarter, $100,000, $50,000, $10,000, doesn't matter, got in there, I'm taking $5,000 and I'm just transferring it to myself personally. And I get to go on vacation with that money. I get to live my life, whatever my lifestyle is. I get to buy an investment property, whatever you want to do. But we're pulling it away from the business in the form of a profit distribution at the end of the quarter. Your taxes get paid at the end of the quarter. Guess what? You don't got to sell your sports car like I did. It's all there waiting for the IRS to take, but you've predetermined it. And then we are also paying ourselves an owner's pay. I usually like to see twice a month. This is going to be in the form of a salary. This is how you live your lifestyle, right? Now, guess what? The downside to this is if you're a new agent and you go make $50,000 in the first 2 months of the year, you're not going and buying that brand new Mercedes. This is going to limit what I call lifestyle creep that is so common in real estate, because I had it too, right? Remember those 2 sports cars? That was in my first year because I went nuts, sold 28 homes in my first year. And before that was a limousine driver, and couldn't imagine the kind of money I was making, that I'd ever make that kind of money, and I went nuts. And then the tax man came. And so learn to live your life off of this. Here's the last little takeaway I want you to take from this is start with something small. In other words, just start with $100 that goes into profit every 2 weeks, or start with 1% of your revenue when you do those distributions twice a month. Like, just start with really small amounts. Because if you do this too quickly, all of a sudden your operating expense amount, especially if right now you're spending a lot, it'll dry up and you won't be able to pay your bills. So that's the simple system. Now, here's the thing. I'm trying to explain that to you in 20 some minutes. Read the book, Profit First. It tells you how to implement this step by step, but it will change your life and you'll never not do it. I've gone to the point where I actually do it in my own personal life as well. So like when I get paid this money at the end of the quarter, I have the same personal system in place. All the businesses I have, the profit account will just flow into my personal bank account. That then goes into, guess what? A bunch of bank accounts. I have an investment account that I've decided a certain percentage goes in there. I have a fun account. I can take my family on vacation. I can buy the RV. I can buy a sports car, whatever. I have the operating expense account, which is where all my bills are paid for our family. And then I have a tax account. I used to have one that was called furniture because we bought a new house and we needed to save for furniture. I didn't just randomly spend. I designed a system that money flows with predetermined percentages. And that's what I want you to understand here. So all the money into a main income account. Twice per month, you're paying yourself a salary out of the operating account. Once per quarter, you get money coming out of your profit account. You're paying yourself in the form of a distribution. And once per quarter, you're paying your taxes. If you operate this way, your money stress will disappear. As simple as this seems. So read the book, implement that system, and I promise you, this business will start to serve you in a much deeper way.
Love it, Andy. A couple of questions. So that got brought up. S Corp, LLCs, how do you address that question?
I address it by telling you to talk to your CPA, because I don't want to give you tax. That's all tax strategy, and that's important. You need tax strategy. I will tell you, there's a point where for a lot of you, if you are making a certain amount of money, and again, talk to your CPA at what that amount makes sense for you. But there is a point where it makes sense to start paying yourself a salary, because if you don't, you are paying a tax on a much larger amount. And I actually did a video on this on our website that talks about at kind of that point. But somebody making 6 figures, 100 grand a year, can save a lot of money by separating into an S Corp and starting to pay yourself like a salary. Here's the thing. You can be an LLC and just be taxed like an S Corp. You don't even have to shift to being an S Corp, but you will save on taxes that way. But again, that's tax strategy. This is a system for profitability that I promise you, if you take the time to implement, it's so simple. Follow the plan and it'll change your life.
And I would add, if you have a CPA or an accountant that tells you as a realtor who's a producing realtor that you don't need any of that, just stay a solo person, you probably should get a new CPA because they're not working strategy with you. So next question, how do you determine owner pay? How much you should take every month and live on?
Yeah, it's a good question. Again, there's more to it in what you should live on and all of those things. I mean, if you read the book, there's a step in this process called an instant assessment, and it's where you're looking back on what you have paid yourself. So you may find that you're paying yourself 45% of your revenue in owner pay, and you may be paying it in the form of salary now, or maybe it's just you randomly pulling money out of your account, or maybe it's all in your personal account and you're just spending the money. But how much did you spend personally? And then what percentage of that was of your total revenue? That tells you right now what your margin is for that bank account, owner pay account. Because here's the thing, you're running Profit First right now. You're just not doing it in a proactive way, in a managed way. So you have an owner pay account and you're using it. We just need to rein it in. Again, this is where I say, go start small. If you feel like your owner pay account is a really high percentage, don't go change it dramatically because you'll run out of money to pay your mortgage payment or your car payment or whatever you have. But step one is, what are you doing now based on your books? What are you doing now? And then let's slowly start to tweak it. Let's go down to 43% personally, and then 39%. And then all of a sudden we're at a point where, we can increase our profit percentage because we've decreased our personal percentage. Same with our operating expense for our business. That can start to go down and get a little bit more manageable. So
we used to say,
do that assessment.
You need to know what your monthly net is, both personal and business accounts and expenses, so that you understand exactly how much you need to pay yourself. Andrew says, do you have separate accounts for paying employees and the owner, or is it general payroll account?
It's a good question there too. And so typically speaking, you're going to have separate accounts there. So that owner account I talked about, that bucket, that's a separate account that only money to pay you goes in. And what I'd love to see, what I do is I actually put a larger percentage in that account, same with my operating account, than I actually spend. So if I'm putting 10% in that account every time, I'm only really paying myself like 8 to 9% until I have 3 to 6 months of my salary saved in that account. And then I can start paying myself more, because now the market shifts. I have money sitting in that account to continue my consistent payroll to myself, and my life doesn't get disrupted. So that's, in all of your accounts, you should do it that way.
Right.
I didn't
realize there was a multiple profit first, but you're just showing a different one there.
Yeah, this is the main one. This is like the guy who wrote the whole, and this is the one I implemented. It doesn't really matter. There's one specific to real estate agents. You can get that one as well. The concept's the same. The idea, the process, nothing changes. So keep it simple. Yeah.
Very good. Andy, thank you very much.
You're very welcome.
Be sure to subscribe so you never miss a round of real talk and real estate wisdom. And if you're loving the show, leave a review. It helps more people like you find us. Until next time, keep shaking things up, stay profitable, and always remember, a great real estate business is like a great martini, well crafted, smooth, and best enjoyed with good company. Cheers.